What is revenue-based financing? In this episode, you're going to learn what revenue-based financing is and how you can utilize it as a business owner. Revenue-based financing is an alternative to traditional bank loans and venture capital. This is like a hybrid mezzanine loan. This type of funding uses the company's revenue as a primary factor for determining how much can be borrowed. It's also known as cash flow-based financing or cash flow financing. It's a very versatile tool, and that's why I wanted to bring it onto the show, because a lot of the businesses I'm working with are utilizing programs like this. Revenue-based financing is best for the following use cases here: general operating and growth capital, acquisitions, purchasing inventory and equipment, bridge or gap financing, project-based financing. And what are some of the competitive advantages of this program? Well, you can get up to $5 million. There's flexible terms, large discounts for prepayments, variable payment schedules, weekly, biweekly, and monthly payment options. So it's a very flexible financing tool. And the best part is the ability to close within 1 to 3 business days. It's non-dilutive, no hard collateral obligations, no personal guarantees or equity or warrants having to be signed. And so it's a great tool when people want fast cash. It's a great tool when you don't want to jump through the hoops of getting bank financing. It's a very streamlined loan product. It's an institutional grade loan product. In the past, there wasn't these type of loans available. It was really small syndication shops that were doing these type of financing. Well, now it's scaled, and it's an institutional grade product where a lot of large revenue companies are coming and using this because the speed and the ease of getting this type of financing is available. Typically, to be underwritten, you need a purchase. You need an application with all the majority owners having completed the application and signing. So anybody generally that owns 20% or greater would need to be a signer on the application. Profit and loss statement and balance sheet, 6 months of business bank statements, and then your most recent business tax return. That's what you need to get the ball rolling. It's a quick underwrite process. You can utilize multiple affiliate companies. So a lot of companies might have a couple sister and brother companies. And if you want to maximize your loan proceeds, you can be creative and use multiple affiliates that you have to get the maximum loan that can be offered. And a lot of the customers and clients that we work with, they'll come back and back and back because it's the ease of the capital and the flexibility. So this is revenue-based financing. It's an ideal product for business owners that are generating a good amount of revenue but need capital to expand, to fill a void for a quick bridge, to purchase inventory as opposed to maybe getting equipment financing. There's a lot of uses for this financing. So anyways, if you have any questions or this sounds interesting for your business, you can book a call below. Obviously, we talk about SBA financing a lot and real estate funding and financing, bank debt, private debt. That's what our channel is about. And as I'm doing more and more business type of loans, the revenue-based loans are a hot product because a lot of times people don't have time to wait 60 or 90 days for SBA financing, and they don't want to jump through the hoops. So this is an alternative, an institutional grade product, which can be underwritten very quickly, and you can fund in as little as 1 to 3 business days, which is phenomenal. So I hope you enjoyed this episode about revenue-based financing, and we'll see you on the next one. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.